Hey guys, it's Josh with Service First. Now, this is Fed week, meaning that the Fed's going to come out with their decision on interest rates. They're very likely to raise them by 50 basis points or a half a percent. And so you guys are going to get lots of questions. I'm going to get lots of questions about, oh, interest rates just went up a half a percent. No, not really, not mortgage rates. And here's why. So the Fed funds rate is what a bank borrows money at. So think about car loan interest rates being tied to this. Mortgages are actually tied to mortgage-backed securities. Now, they are correlated in a way, and here's why. So, everything we do is based on what's expected. So, right now, it's expected that 50 basis points is going to be the rate hike. And so, that's already been built into our rates because that's what's expected. We've known for a while now that we really think it's going to be 50 basis points. What that means is if they came out and said, hey, we're going to hike it 25 basis points or less, our interest rates would actually improve, right? That's better news. If they come out and say, hey, right now we're going to raise them 75 basis points instead of 50, our rates would immediately go down, not because they raised them 75, but because it was worse than expected. And so what's going to happen with mortgage rates is going to be based not just on what they do. We really think this time it's going to be 50 basis points, but it's the expectation of what they're going to do versus what they actually do. The second piece that really matters in this is what they say. So let's just assume it's going to be 50 basis points. That's what we think it is. Let's say it's 50. If they come out and say inflation is a major problem, we're going to raise it 75 basis points next month, and we'll do it again the next month and the next month until we get inflation under control. Well, our interest rates are going to go up because of what they said, because they're clearly scared of hyperinflation. They're trying to get it under control right now, and they're going to do everything they can. If they come out and say, hey, we're going to raise it 50 basis points, but we think this is really going to help, we'll kind of take a wait and see approach from here, and we'll raise them as needed. Our rates could get better because that's better long-term news. So long story short, our interest rates are based on the expectation of what's going to happen in the future. They're not directly correlated with what the Fed decides to do this week. I really hope this makes sense. I'll try to show this to you guys using some charts maybe down the road or something to kind of illustrate it. If you guys have questions on this, if your clients have questions, just give me a call. Thanks.